As of yesterday, the world has its first trillionaire. The dollar trillionaire is Elon Musk. Why? Because SpaceX went public. An incredibly successful IPO. With a valuation close to $2 trillion, it instantly became the world's sixth most valuable company. Post-IPO, its value rose, closing the day in the green. Its future performance remains uncertain. Elon Musk's status as a trillionaire remains controversial because this is wealth on paper. In other words, this wealth comes from stocks. If he tried to sell those stocks, they wouldn't be worth nearly as much anyway. Why? Because their value would drop. But either way, headlines love stories like this. Is SpaceX worth the investment? That's the big question. It's a fascinating company, but its valuation is strange, and it's not even profitable yet. Free cash flow is negative, and revenue doesn't justify this valuation. So should you invest in this company now? More importantly, when to invest and when not to. But first, let's examine the company. What does it do, and what's its target market? Why did people value this company so highly? Yesterday, it raised almost $75 billion in net cash by offering about 5% of shares to the public. The company created 4,000 new millionaires yesterday. Even the tea servers at SpaceX are now dollar millionaires. Why? Because they had stock options. So does this benefit us? In what case would it benefit us, and in what case would it not? How should we approach this with a simulation? I'll explain all of it to you. If you're ready, let's get started. There's a website I'm a paid member of. They had a really interesting take on it there. It says that to understand why SpaceX is valuable, you need to go back a bit in history. So during the famous period when the Ottoman Empire dominated the Mediterranean, Europeans started searching for new routes to reach Asia. Vasco da Gama, a Portuguese sailor, managed to do just that. He sailed around the Cape of Good Hope, down by South Africa, and found ways to reach China and India. I've been there. Actually, I went twice. It really is a very nice place. The companies that were the first to use these trade routes reached incredibly high valuations. I mean, just to give you a comparison, for example, VOC, the Dutch East India Company. This was also the first publicly traded company in history. It also laid the foundation for capitalism. The Dutch are already well known for being good at these things. They took the company public so they could finance a giant fleet and the army to protect it. At its peak, the company's valuation reached 32% of the Dutch economy. For comparison, with Nvidia, it's 16%, with Apple, it's about 14.5%, and with Alphabet, it's also around 14.5% right now. It's claimed that SpaceX is doing the same thing. So SpaceX is doing what Vasco da Gama did. Back then, this was done to reach Asia. SpaceX is doing it to access space. The reason for this is that SpaceX has made access to space cheaper. You know, after SpaceX rockets launch, some parts return and can be reused. They're planning to make even more parts reusable, and at the same time, they aim to do this faster. Between 1981 and 2011, America was flying into space with space shuttles. They were flying with those space shuttles. At that time, the cost of sending 1 kilogram of cargo into space was as high as $54,500. SpaceX has now managed to bring this down to as low as $2,700. So that's a reduction of more than 20 times. Soon, if they can pull off the Starship project, they aim to lower this to as little as $500. That means a 100-fold decrease in cost since the space shuttle era. The investment thesis is already based on this. If this company can really make space transportation this cheap, the possibilities for what can be done in space will open up incredibly. And just like the Dutch East India Company back in the day, this company will also form a monopoly. And breaking up this monopoly is not easy at all, as we'll see in a moment. SpaceX's technology is truly far ahead. It's impossible to close that competitive gap. There are efforts around the world, but so far none of them are really significant. In fact, right now, SpaceX alone handles between 80 and 90% of the cargo transportation from Earth to space. So, in this sense, it's a monopoly. You know, investing in monopolies usually yields good results. That's the foundation of the investment thesis here. SpaceX claims to be the monopoly of space. But is it really worth that much? As of yesterday, the stock closed at $160.95. It peaked at $176.52 today, then faced selling pressure. With 33.2% revenue growth this past year, it's not growing by 100%, but the growth remains solid. Wall Street's consensus target is 177.50. It's nearly there. And yesterday, it even peaked higher. You just can't buy this company at this price, my friend. By the way, Wall Street gives one-year targets. So what's the big picture? The big picture is that SpaceX is riding a wave, the wave of rocket technology. This isn't just research for them anymore. For example, the Falcon 9 can launch multiple times a week. As of June 12, 2026, it has completed over 660 flights. In other words, there's no one beyond them. They handle about 80 to 90% of all space transportation in the world. Competitors are at least 30% to 50% more expensive. No one else can fly as frequently as they do. Right now, they can send cargo to space for an average of $2,200. Here, the cost is around $1. So they're doing this with a super high profit margin because there's no competition. It's a monopoly right now. And now Starship is coming into play. Starship is their biggest rocket. Of course, as the rocket gets bigger, the amount of cargo it can carry increases too. That way, the cost per kilogram goes down. If Starship is successful, the cost of sending 1 kilogram of cargo could drop to as low as $300. The company's valuation model basically comes down to this. If they can maintain this de facto monopoly, keep being the Vasco da Gama of the industry, and bring costs down to $300, they'll be able to sell at a pretty high profit margin and turn into an amazing company. But interestingly, the company isn't really making much money from this right now. When we invest in a growth company, we wonder what the total size of the market it can reach is. This is called TAM, or Total Accessible Market. Honestly, in the case of SpaceX, calculating this is a bit difficult. If we start with the connectivity market, which it currently specializes in and makes most of its money from, meaning Starlink, those satellites that beam internet down to us, the total global size of that market is around $1.6 trillion. If we look at it more broadly and include artificial intelligence, because this company is creating AI data centers both on Earth and in space. It also has major clients like Anthropic and Google. Of course, the ones in space are still just a project for now, but they're building the ones on Earth. If we broaden the scope a bit more, open up the vision and dream a little, we reach $28.5 trillion. Honestly, this is the target the company itself has set. It's the total addressable market size they've included in their IPO prospectus. By the way, $28.5 trillion is almost the size of the current US economy. So we're talking about a pretty vast market. A huge portion of this market doesn't actually exist yet. These are dreams for the future. So what are the facts? As of today, the company has made $18.67 billion in revenue over the past 12 months. So there's an incredibly huge gap between what's real and what's potentially accessible. Elon Musk is a great storyteller, so he convinced investors about this. And since those who invested in Tesla, especially in the early stages, became very rich, they believe Elon and pull it off again. On the other hand, Tesla went public at a much lower price. But here we're seeing a public offering at an incredibly high price. If Starship really works, things like a space data center, interplanetary missions, and journeys to Mars become possible. On the other hand, if this progress is slow, there's the Falcon economy. If only the Falcon rockets are available, the space age gets postponed. In my opinion, just transportation with Falcon isn't enough to justify this kind of money. There are a lot of issues ahead that could slow him down. Regulatory mechanisms. For example, if Trump loses the election and the Democrats come to power, they're not too fond of Elon Musk. A lot of restrictions could be imposed. They're spectrum rights. So who can use the spectrums in space and how? Recently, they paid a serious amount of money for this. They might constantly need to buy these spectrums. And of course, there are also geopolitical risks. There could be satellite internet restrictions outside the US. Countries might not allow internet usage. For example, Turkey doesn't allow it right now. It's one of the few countries in the world that doesn't permit it. Because to be honest, governments here are trying to protect local players a bit. Then there's CEO Elon Musk. He's controversial, highly successful yet eccentric. There's also the risk of key man dependency. I mean, we're putting a lot of responsibility on a single individual. If something happens to him, that's a problem. But Elon Musk is an entrepreneur who can foresee technology trends and find funding. Right now, he's also successfully completed the biggest IPO in history, raising a massive amount of money. I believe this project needs much more funding. The $75 billion from yesterday is already spoken for. Hence, they only offered 5% of the company to the public. There could be further dilution in the coming periods. In other words, there might be new public offerings. So what does this company actually sell to make money? There are three main sources of revenue. One of them is Starlink. Right now, we can actually say this is the only area where they're making a profit. The second is space launches. There, the gross profit is good, but the net profit doesn't really trickle down to the bottom line. They transport cargo to space. And then there's artificial intelligence. That's their new field. They've built one of the world's largest data centers. And right now, they're selling the data center capacity to companies like Anthropic and Google. People who know the company well think that Elon Musk and his team are the fastest when it comes to bringing these data centers to life. And because of that, they're creating a serious cost advantage. You know, the GPUs in these data centers are extremely expensive. Even having them sit idle for a single day can create enormous costs. Elon Musk and his team have achieved significant success in this area. When we look at the 2025 breakdown, Starlink makes up $11.4 billion of the revenue. Space transportation accounts for $4.1 billion and artificial intelligence for $3.2 billion. The data center usage agreements made with Google and Anthropic brought the company a total of $5 billion per month, which means nearly $60 billion in new annual revenue guarantees. There's no guarantee that these agreements will last forever. Google could back out along the way, and Anthropic could back out too. We also don't know how much profit the company is making in the meantime, but revenue suddenly shot up. So yes, the revenue on the balance sheet is small, but the new revenue is huge. There's also $13.2 billion in deferred revenue on the balance sheet. This represents orders that customers have paid for in advance. They place orders in advance for space transportation. So as of today, the real money comes from Starlink subscriptions. They're either losing money or making very little from launches and artificial intelligence. It's hard to know for sure, but overall, the company's operating at a loss. The main products right now are Falcon 9 and Falcon Heavy. Falcon Heavy is used for heavy payloads. Starlink, which is satellite internet subscription. In 2025, they made $4.4 billion in operating profit from this. For human transportation, there's Dragon. Here, as you know, they carried the first human to the space station together with NASA. And then there's Starship. The Trump administration wants to protect America from space as well. They want to offer a bigger alternative to Israel's famous dome in this field. They want to protect the country from both physical and intelligence attacks that could come from space. Here too, it's possible for SpaceX to be involved in the Starship project. So, what kind of exciting projects does the company have ahead? There are some really great projects. For example, there's the Starship project. We've been talking about it for a while now. There's also Starlink Direct to Cell. This is also a very exciting project. With the current system, your cell phones can't connect directly to Starlink satellites. You need modules in between. There's a possibility of getting rid of those modules. This will make it possible for many more people to communicate directly via satellite using their cell phones. Data centers in space. This is one of the big exciting things behind all of this. It's getting harder and harder to build data centers on Earth. Costs are going up. In some places, it's politically difficult, citizens object, it's hard to find energy, hard to find water, hard to find land or space. There could be some advantages to building these in space. Although there are quite a few different opinions on this, statements from Google, Microsoft, and of course Elon Musk all suggest that data centers in space could make sense. These won't be massive data centers, and they might not need to be in space because it's possible to achieve some interesting efficiencies in a zero-gravity environment. But these are still experimental topics. Right now, thanks to a collaboration between Planet Labs and NVIDIA, there's a tiny data center orbiting in space. These will most likely be single racks as well. There are still a lot of open questions, like how they'll communicate with each other, how they'll serve the Earth, and so on. But this is also one of the projects the company has put in front of us. It's extremely exciting. It has quite a few competitors, but in reality, it doesn't have any true rivals. I mean, Rocket Lab's the company that could be considered its closest competitor, because Rocket Lab can also launch rockets into space very frequently, but they still can't recover them yet. They launch smaller rockets. Soon they'll be putting their Neutron rockets into operation. Neutron might be a bit more ambitious, because they say its costs will be lower than Falcon's. But SpaceX is really strong here. They've done a lot of these flights, so it has a very well-established structure. It dominates 90% of the market. Moreover, Rocket Lab is actually quite an expensive company. It has a very high valuation, like 85.6 company value to sales ratio, and it's not profitable either. Today, SpaceX looks pricier with a price to sales ratio of 113, but these are past revenues. It will soon earn brand new revenue from data centers. So this has already been cut in half. The company value to sales ratio has even dropped to around 40. In any case, I would choose SpaceX over Rocket Lab. Blue Origin is Jeff Bezos' company. It's not successful. It has a lot of problems with launches. They have a lot of money. Eventually they'll succeed, but I can say they haven't caught up to any of SpaceX's 6 paths yet. There are 2 government-backed organizations in America and Europe. They're not really serious players. There's another one on the Chinese side, but they're not close to this technology yet either. Amazon's Kuiper is a competitor to Starlink. It can be considered a serious rival. There's also a competitor from China in this field. But honestly, when you compare them, SpaceX is so far ahead that I don't think there's any real competition right now. Plus, there are factors that will make the competition even tougher. At the end of the day, this is a matter of economies of scale. Since they're launching more and more rockets, they're finding ways to lower their costs even further. They're becoming even more efficient. On the other hand, Starlink has the advantage of network effects. Remember, these used to be hot topics of debate in Turkey. Which of the 3 operators has the most towers? Because the operator with more towers has coverage in more places. Then more people use it. Right now, Starlink is way ahead in this area, so it's incredibly hard for competitors to come in and steal customers from Starlink. There's a very serious barrier in front of them. Starlink has already deployed tens of thousands of satellites so far, and the technology isn't easy to copy either. I don't mean this for the satellites themselves. That part is relatively easier. They're already competitors too, flying rockets at low costs and then catching and landing them afterward. These aren't easy things to do. It also seems like there's a technological competitive advantage that they can maintain for many years. There's a 49.1% gross profit margin. That's a pretty good gross profit margin, but at the bottom line, the company's still losing money. Free cash flow is negative $9 billion. So it's burning through cash. It also has about $14 billion in debt. Before going public, it had $23.68 billion in cash. $75 billion will come in from the IPO, so they'll reach around $100 billion in cash. But if they keep burning cash at this rate, that'll last them at most 10 quarters, or 2.5 years. But when we talk about burning cash, this is really important. It's worth emphasizing. The company actually generates positive cash flow from its operations, around $1 billion. But they're making a lot of investments. They're using up their cash on these investments. That's why I'm sure this company will need more money in the future. This could happen through new public offerings. If Elon Musk says something like, "No, we won't go public again," don't believe it for a second. I've experienced all this with Tesla. There could be more public offerings or new borrowing. So what does this mean? You bought the company's stock. The share that your stock represents in the company could decrease over time. So even with all this massive cash inflow, I can't say SpaceX has a super strong balance sheet, even if they have $100 billion in cash. According to his method, which is actually a method developed by an American investor and the same one we use to analyze companies, I really like it a lot. So is the company innovative? Is it the leader in its sector? How are its growth rates coming? What's the general market sentiment at that time? Look, if markets are dropping, most companies still struggle. How much institutional interest is there? Are they actually buying the stock? What was the growth rate in the last quarter? Where does supply and demand stand for the stock? We don't know some of these things. Right now, as of yesterday, there was a lot of demand, but we don't know what will happen next week. We don't know if there's institutional interest. We don't know the momentum of the stock. It's only traded for a day, so this week is uncertain. Annual revenue growth isn't that impressive, averaging 34.1% over 3 years. That's good. By the 3rd year, this dropped to 15%. This part is mediocre. They're tech strong and targeting a huge market. They're leaders in their sector, but they're not a 100% CAN-SLIM candidate. They have a score of about 75 out of 100. They're a strong candidate here. How should we calculate the company's valuation? The company's unprofitable. That's why we can't look at things like price to earnings ratios. Here, we can look at the company's value relative to its sales. Looking at it this way, if the company continues to maintain its current growth rates, that is, the growth rates of the last 3 years, continues to maintain its profit margins, and also keeps its stock dilution rates at today's levels, which is around 3%, although this could increase in the future. What would that bring us in this case? The stock price could reach $580. That would give us a return of about 29.3%. If we pay a price of around $129 for the stock today, though as you know, the stock has already reached $160. If we're expecting higher returns, for example, if our annual return expectation is around 40%, and if the company's value hits all these targets and the stock price reaches $580 in 5 years, then the maximum amount we should pay today is about $114. Let's say we're okay with a return similar to the S&P 500. So a 20% return would be good for us as investors. In that case, you could pay up to $233. But of course, that's for a 5-year term. If you shorten it to 3 years, things change. If you shorten it to 1 year, it's different again. Business school members will be able to play with the scenario simulation table. I'll share the HTML version with them. This company is pricey. So let's revisit the base scenario again. Even if it continues to grow at 33% and the company's enterprise value to sales ratio stays the same, the stock already closed at $160. The most you should pay is $173, and I don't think the company can maintain its enterprise value to sales ratio anyway. That's very difficult. 109 is too high. It needs to drop to a fair level. It's down to the 50s. If a crisis hits and it drops even further, to the 40s. So when there's a financial crisis like this in the world, the company's valuation multiples drop instantly. In that case, the most you should pay is around $62. Because the company's value drops to $75 after 5 years, and that would result in a negative return for you. This scenario, it's like a game scenario, can be thought of in different ways. What are the catalysts that could cause the company's value to keep rising rapidly or to fall? I mean, if Starship is successful in its test flights, that's fantastic. It's very positive for the company. If it's included in the NASDAQ 100, that's great, because as soon as it enters the index, funds will be forced to buy the company. On the other hand, in the coming period, company employees will sell a portion of your shares. They'll have the right to do so. They've been waiting for years to sell their shares. This is called the end of the lockup period. This will happen in 3 to 6 months and could create quite a bit of pressure. Space data center agreements. Maybe one day Google comes and says, we've already placed the order. From now on, SpaceX will build a data center in space for us. They say, this could be a positive development. The IPOs of Anthropic and OpenAI are negative for the company. Why? Because they'll be sucking liquidity out of the market. This could hurt SpaceX's valuation. We shouldn't expect much from them next year. Markets are volatile, so with a positive atmosphere, valuations can soar. This has happened before with Tesla. It's possible, but does the company really deserve this valuation right now? If you believe in its future and its dreams, then yes, it does. But its current financial situation definitely doesn't justify it. Plus, the company could go for new public offerings and make dilutions. So it wouldn't really be wise to invest a lot of money in this. I bought 10 shares each for my son and my daughter. Those shares can just sit there for years. I wouldn't even care if I lost money on them. It's really a small amount of money. I'd honestly hesitate to invest any more than that, because there are a lot of things that could go wrong. Starship could fail. The company's growth rate could slow down. Lockup sales could happen, meaning insiders might sell a lot of shares. The company could experience a cash flow problem, because it's really a very capital-intensive business. The AI bubble could burst. I don't see a bubble, but demand could decrease. So if demand for data centers decreases, this company will also be hit very, very hard. At this point, I don't see making a big investment as reasonable at all, but I also don't want to stay out of it completely. In the coming days, if those thresholds we just talked about are gradually crossed and new news comes in, that would be great. But here's the truth. I invested in Elon Musk and Tesla not during the company's IPO process, but still pretty early. I bought shares at around $13 or $14. The stock hit $420, so it's made me plenty. That's why I'm staying in. But Tesla's IPO price was much lower. This company is going public right now with a very high valuation. So how should someone who has never invested approach this company? I mean, I don't think they should buy it right now. I'm not saying it can't go up from here. Anything crazy can happen, but we're trying to think rationally here. I've explained all the numbers to you. I think when the lockup sales happen, that is when employees inside the company start selling their shares, there will probably be a drop. that could be a good time to buy. Or, looking on the bright side, if we get confirmation on the Starship side, meaning if there's proof that these flights can be carried out regularly at a good cadence, maybe the stock could strengthen. Or if it gets big orders on the artificial intelligence side. But either way, you should give this stock a small place in your portfolio. Of course, at the end of the day, I'm just someone talking on YouTube. Don't take my advice too seriously. I mean, sometimes stocks can behave very irrationally, and no matter how high the valuation is, they can still shoot up even higher. That's possible too. It depends on the market hype, the liquidity in the market, and what Elon Musk is going to do. But still, I wouldn't consider taking a very large position. Right now, my position is just symbolic. It's not even 1% of my portfolio. As these steps are completed, I think I'll gradually move toward having between 1 and 3% of my investments there. Yes, this is the kind of company we're dealing with. I've tried to explain and summarize it for you as much as possible. It's a very exciting company. If Elon Musk manages to achieve everything he dreams of, I think it could become the most valuable company in the world because he has some incredible projects. But when you invest in this company, you're also taking on some very big risks. Be careful. You need to be willing to take risks. These kinds of tech companies can make you a lot of money if they succeed. But I really think the valuations here are a bit too optimistic. I hope you found this interesting. If you did, a like or a thumbs up would be awesome. Stay with love, stay with respect.